Radio Cayman,
The voice,
the heart, the soul of the Cayman Islands.
Live from Radio Cayman Studio, this is
Money Sense, bringing an informed financial perspective to the Cayman community.
Good morning and welcome to Money Sense. I'm your host, Amy Hubble, and we've assembled today in studio quite the global trifecta of financial planning experts. Of course, we have Georgie Loxton, CFA of Liberty Wealth Partners, as well as Alan Shine, Certified Financial Planner of TSC Financial Services. Welcome, guys. Thanks for coming.
Thanks for having us.
Thank you so much.
All right. And today we're going to be tackling some of those kind of tough questions that I know that all three of us have been getting from our clients in hopes that we can together kind of reinforce some of those strong financial behaviors in the broader community. A big ask for a 30-minute show, but let's get started. All right. First question. Here we are, almost in June, and the market has gone up a lot, almost 80% since the pandemic bottom. Remember our show that we did kind of in the middle of the pandemic, Georgie?
Oh my gosh, it's so funny to remember back, isn't it? And
I
it's
know.
so important to go back and put yourself back in those
We were
moments.
like in our own houses trying to do it
Yeah.
remotely, and everything was crazy.
And the market was falling 10% a day.
Yeah, it was like I lost more money than I ever had in my entire career today. How was your day? But given that we've had a rise of 80% since then, have people missed the boat? Should they now just wait till the next dip, or should they invest now? I know you're getting this question a lot, Georgie, so start us off.
Yeah, it's such a good question. And the market is all about psychology. And when we're right at the top of a market, you have pure euphoria. It's that old adage of the shoe shine boy, right? When you're getting your shoes shined back in whenever that was, the 1920s, and the shoe shine guy starts telling you about the stock that he owns, or the taxi driver. That's when you know you're near the top.
How old are you, Georgie?
Yeah, not that old. But I don't see that now. Like, I'm not seeing this kind of desire of people to plow everything in. I see more this hesitation of what you're saying. People thinking that surely the market's going to fall, that would be a better time. Now, my philosophy, and I say this to people all the time, is, and I think you said exactly these words last time we were on the radio, the right time to invest was yesterday, the next best time is today.
Absolutely.
Yeah, anything else is market timing, and the market goes up 75% of the time. So if you don't get in today, or as soon as you have the money available to get in, you're trying to market time, and you're betting against the odds that the market goes up more often than it goes down. And so the advice I always give to people is, when we have the money to invest, we invest. And we try not to market time. We try not to look what's happened, because the world's going to keep spinning. Companies are going to keep generating profits. And over the long run, the markets will keep going up. And that's what you want to be a part of.
Yeah, I notice a lot of people, our brains kind of trick us, and they kind of decide that they want to invest. And they're like, well, I'm just going to wait, and kind of this idea of buying the dip. And then from the moment they invest, the market runs up 20% a year later, and then it dips 7%, and they get in, and they think that they've won somehow.
Right, but you've missed out all the gains.
But you missed the gains,
the
and
problem
put back.
that people have is they start looking at a short-term investment horizon if they're not already in the market. So they're not thinking, oh, let me invest for the next 5, 10, 15 years. They start thinking very short-term, what's going to happen now, what's going to happen tomorrow, what's going to happen next week, rather than actually just getting into the market, sticking in there, and sticking to your guns.
Right.
Because otherwise, if you don't have a long-term strategy, as soon as something goes wrong, you're gonna get out of the market, and you're gonna just keep on losing. It's a cycle that you don't want to get into. So if any better time, even if you knew the market was going to crash next month, you should still technically be investing if you've got a long-term horizon. I mean, if you take the crash just before, after COVID, there's a lot of funds out there that if you had known that the market crash was going to happen, and you still invested and went down 40%, you still ended the year on 20%. But for the person that didn't do it, they're still waiting, and now they're asking, when's the next crash happening?
Waiting. They're sitting on the sidelines waiting. And it becomes psychological warfare, because you're constantly waiting for the fall. And I say to people, if you can't get into the market on the way up, you definitely won't be able to get in on the way down.
No.
Because psychologically that's so much harder,
Very
because
difficult.
You're always thinking it's going to fall further.
Yeah.
And then, no one rings the bell on the day
100%.
that the market bottoms and says, hey, today's the bottom, get in, right? It
Right,
just happens,
right.
and the market turns around, it goes up, and then you blink and you missed it. I mean, those first, I think, 5 or 10 days in April of last year after the market bottomed, it was something like a 20-odd% return in those days.
Yeah.
So
I
if
don't know about
miss it-
you, but I didn't have any clients that called me and was like, I've got an extra $1 million, put me in right here. No,
Right.
zero.
Right, but at least they stayed in.
Yes,
yeah?
of course.
So they got that, incredible recovery that we're still in. And the world is opening up. Economies are really strong. Sort of counterintuitively, companies are doing brilliantly. I mean, the earnings per share on the S&P 500, which is the biggest 500 companies in the US, is higher than it's ever been before.
Oh, yeah.
Right now.
Absolutely.
So the market recovery is warranted when you look at the data.
Yeah, and I was thinking about that the other day because I was considering, the American consumer drives the bus for here or there, up and down, all the time. And so the American household, every single American adult was literally sent a check for a total of $3,200 US. So you consider that on a household level, and now you've got a household that probably had an extra $10,000 just sent to them in free money. So they've got that money to spend. Then they've, just like us, they've not gone anywhere. Household savings levels are up, I think the last reading was almost 30%, which is, on an average of being about 7%, just meteorically high. So there is money to be spent in this economy, and that's why you see these just blockbuster earnings. The only issue is we're having these supply issues. We're having these kind of gluts in staffing, and we're having pipelines be held for ransom, and we're having container ships being stuck in the Suez Canal, and that's really the only holdup to the growth from my perspective.
Yeah, well, the nice thing is that there's still many problems to solve and new problems, and there's going to be companies that come out hopefully, and you can invest in those companies and get some performance. But my concern is also that markets have been artificially bolstered, and as you start coming out of all these lockdowns and everything, I think if the markets don't start picking up, it might cause a bit more uncertainty, a bit more volatility, and as well, like people getting worried that, hey, people are supposed to be spending and they're not.
Yeah, no doubt.
And
inflation
we'll have to see how that
concerns
goes.
could lead to rising interest rates, but
Sure.
We'll see. And we don't want to wish for that. But okay, next question, and I think it's a little bit related. Some of my friends are making great returns by trading stocks online. Should I also start trading? Alan, you want to talk about this?
Yeah, okay. That's something I get a lot, and particularly over the past year. And you almost can't disagree with the people that want to trade stocks, even if they don't know what they're doing. And in fact, I support that because it can help you see how the markets work.
Yeah.
So I always
It can be very
say,
educational.
Exactly, very educational, and a lot of the platforms actually give you play money to play with.
What's
But
your
that's-
quote though? If you don't know what you're doing, the market's a very expensive way to find out.
Yeah,
a very expensive
exactly.
place to find out.
Exactly, yeah. But what's happened now over the last year, with massive recovery, you almost can't lose because you've started trading at the bottom and the markets have just been shooting up. You can't make a bad choice, so it's now you think you're trading well. And the problem with that is as you get more confident on actually what's not got anything to do with your trading skills, you start putting more money in, and when things go wrong, it goes badly wrong.
Yeah.
And you don't know how to protect yourself from that, or how to think about it correctly and what trading strategies to follow, because you've never had to, and now you've gone into it with too much money rather than leaving it to the professionals to do for you.
Yeah, I saw GameStop was popping again this week too. So.
Learning in a bull market, which is the up market for people that don't know the lingo, is it's a very tough place to learn because, as you say, a rising tide lifts all boats. So if you're buying stocks and you've been buying stocks for the last year, you've made money, but that's not a reflection of your trading skills, as you say.
Exactly.
That's just a reflection of the market, and overconfidence in investing is one of the most dangerous psychological biases.
Absolutely.
And it's not a way to build wealth. And I always try to explain it in terms of how you build a pyramid. You can't just build a pyramid from the top down. You have to start with a base that's basically making sure that you are spending less than you make and that you paid off any high interest credit card debt. And then the next layer, that you have an emergency fund that makes sure you never have to go into high interest credit card debt again. And then that you buy a house and that you are invested for retirement in low cost index funds for long term, diversified. And then at that point, you can put the top on the pyramid, which is speculative trading stocks, crypto, if that's your thing. it's something that I've done in the last year too. I've had pet stocks. I'm sure you guys have too, and I love it. And I said, yes, of course, you should do that. You should enjoy investing. You should learn about stocks and learn about trading and invest in things that you care about, but only after you built those other bases.
And generally only with a certain pot, right?
Absolutely.
You allocate the pot and you acknowledge that it's a play pot.
And acknowledge that
and that
pot
you're
could
not,
go to zero.
Right, and that you're not an expert.
Yeah.
And if you look at the true professional experts, that are managing multi-billion-dollar hedge funds with all the resources that they have, and they can't outperform the market, you have to ask yourself, what makes me think that I can do that?
And those are the people you're going up against.
Right, that you're up against you're up against the toughest competition when you invest in the market. So if you acknowledge that you're not better than a multi-billion-dollar hedge fund or, professional fund manager, then you have to say, okay, I need that diversified, low-cost index fund portfolio as the bulk of my wealth, but that doesn't mean that I can't have fun on the side.
Absolutely.
But acknowledge that it's fun on the side.
Yeah, and the other thing I like to point out to people is how much time they're spending on actually trading their stocks. So whatever research and graphs they want to look at, but the amount of time that they actually physically sit looking at how their investment is performing and performing the trades, it becomes a waste of time. It's actually more expensive than just giving it to somebody else to do.
Right.
Because if you take your own hourly rate at what you earn at work and you apply that to how many hours you just spent on your trading, you actually lost a lot of money just by doing that.
And that's such a good point, Alan,
Yeah.
because people don't actually know their returns. There was
Exactly.
a great study when they looked and they asked people to tell them what returns they got in their brokerage accounts. And the guess that people gave was so wildly different from the actual calculated returns in the brokerage account, because money's often flowing in a lot into individual, retail investors' brokerage account and flowing out. So calculating the true return is
I
not
guess
that
that's
easy,
true.
and people don't actually know whether they're making money or losing money.
And you remember your wins more than your losses.
Yeah.
I know I pay a lot of money for performance calculating software, so unless any of my clients are individually paying for
Then they don't
as
truly
much
know.
as that software does actually cost, I see your point from that for sure. All right, next question. Cayman's property market is on fire. Is now a good time to invest in property? Anyone?
I get nervous around property sometimes. Again, I don't think people are often investing in property, rental property, without having the correct base in place, like you say, your emergency savings, the correct other investments in place first. So they're diving into rental property and not really considering, how's the property market going to change? Is my rental income going to cover my costs and maintenance? People never look at your cost to invest, your deposit, which you get back, but your stamp duty, which is, and especially if you look into internationally where you maybe don't have to pay that stamp duty, it's, maybe you should start looking at that. But the market's changing, as we've seen with COVID, people are working more remotely, and there's nothing stopping people from not living in Cayman, so that could affect the market. So I'd definitely say, if you're going to start looking at buying rental property, you want to make sure you can cover the rent of that for at least 6 to 12 months in case things don't work out and you have to sell.
Yeah, I've talked about this before, I think, on this show, but I just always challenge people not to think about property as an investment, because it tends not to be a great investment. You can get lucky with property and time it well and, buy low and sell high. And there's certainly plenty of people that have managed to do that in Cayman in the last 5 years. But when you look at the long-term return of property, it doesn't come anywhere close to the long-term return of the stock market. Right. And even when you look at the return of property, that hasn't taken into account the costs that you've incurred in owning that property, which, as we know, as property owners, is huge. Right? There's always something that needs fixing. There's strata, there's interest to the bank. You take out all those costs, and property doesn't really give you much of a return.
Well, unless you also use the financial gearing aspect, like other people's money, you borrow from the bank, you invest in property, you sell it in a couple of years, you can make a nice return that way. But again, that should be one of the last types of investments you should be doing, after you've structured your finances properly. Because it gets more risky as you borrow money to do it.
Yeah, exactly. Get leverage. Well, we have to take a quick break. So come back in 1 minute and we'll continue this conversation on real estate and rental property investment.
We keep it 100. Radio Cayman.
Praise time.
Praise him, praise him.
Come and let's praise the Lord. Come and let's praise the Lord. Praise him in the morning and in the evening. Oh, let's praise the Lord. Praise time in the morning.
Praise him, praise him.
Weekdays 6 to 6:30 a.m.
Radio Cayman, waking you up.
Rock my soul in the blues of my faith in your hand. Rock my soul in the blues of my faith in your hand.
Praise time.
I know he cares. He'll always be there. Oh, yeah. Praise him, praise him, praise him,
Praise time.
Set your clock for 6 a.m. or you will miss it. This is
Money Sense, bringing an informed financial perspective to the Cayman community. Brought to you by the CFA Society Cayman Islands.
And now, more Money Sense.
All right, and welcome back to Money Sense. I'm your host, Amy Hubble, and we are joined by Georgie Loxton and Alan Shine, and we are continuing our conversation about financial planning as a topic, but specifically right before the break, we were talking about investing in real estate for your home, investing in real estate as a rental property. And my thought on this is kind of if you are looking to buy your home or buy the place that you live in, I think that is a good investment. You know, financing is lower than it's ever probably going to be, lower than it ever has been. And so you have to live somewhere, and you might as well be paying yourself rent. So I think investing in buying the place that you're living in is a great investment. But I kind of agree with both of what you guys have been saying in terms of rental property. Is I think a lot of times people don't understand or they're intimidated by investing in kind of the stock and bond market. And we're a little bit biased because we manage marketable securities for a living. But real estate is something they can kind of tangibly touch. They can drive by it. They can see it. They understand how rent works. It's something very tangible, and so they can understand. But exactly what you guys are saying, investing in real estate means a loss of stamp duty of 7.5% right off the bat, the first day that you go by, closing costs, furniture, management companies.
10%.
At least, right? And then you've got to do maintenance over the time. You have to pay your insurance for hurricanes. And it's not just a number of what you bought it for and what you sell it for. There's all of these maintenance costs in the middle that I don't think people necessarily calculate when they're saying that this is how much I'm making on my real estate.
They never ever do they? I mean, how many times you had a conversation with someone that says, I bought a house for this and I sold it for that, therefore I made this.
Yeah.
And I say, well, you didn't.
Did you redo the floors? Did you put that granite countertop in?
Absolutely.
Change
But
the
you're so
shower?
right about buying a home. A home is a home,
Yeah.
right? And it's so important that people buy the right home for their family, the home that they love, but don't think about the home as an investment.
Right,
And
exactly.
the other thing that we haven't touched on, and we touched on leverage just before, but of course the point with leverage is it works beautifully on the way up and it blows you up on the way down. And, you know, that is a real danger of leverage.
Yeah.
And the other point that's so important with real estate is, you know, we have this bias where sometimes we think the things that are safe are really risky, and sometimes the things we think are risky are really safe. And I think this is an example of that, because if you have all your wealth invested in property in the Cayman Islands, you have absolutely no diversification in your family balance sheet whatsoever. And you're putting, you know, you really, really are putting all your eggs into one basket. And the basket is a very, very, very small basket.
And a very illiquid basket.
A very illiquid basket, a very small basket. And, you know, there's a whole world in which we can invest. And that's the beauty of the stock market, is that you can buy all the best companies on the planet.
Right.
And some are going to go up and some are going to
For
go
free.
down. Almost for free, literally for free. Right? There's no transaction
Right.
costs hardly to get into that. And that's just not the case when you buy, you know, you put all your money into Cayman real estate. You're betting on something that has gone well in the past, but there's no guarantee that that's going to continue into the future.
Yeah, absolutely.
Absolutely, and also with you know, inflation coming in the States, they might start raising interest rates. So all of a sudden, where you thought you're going to make an income, You're not anymore.
That's such a good point, because people are buying properties right now based on their payments today at the rate that interest rates are today.
Yeah.
And we could see rates 2% or 3% higher in 5 years' time. And you need to know that if your monthly mortgage payments go up, by 50% perhaps,
Yeah.
that you can cover that.
Yeah, and you should basically not buy the property unless you're happy with that.
Yeah.
Because that is a reality.
Yeah.
Well, it depends on your loan, right? If you get a fixed rate, your payments are going to be the same. And so if you can lock in...
Totally. But the
at a
fixed rate rates are much higher today than
Yes, very true. And a little rare to have. I think you have to have very, very good credit and lots of cash on hand to qualify for the long-term fixed rate. But like you said, especially a lot of the mortgage rates reset as that prime rate kind of moves up, and you start to see your payments having to go higher and higher and higher because your interest rates get increased. So make sure you understand the difference in fixed rates and variable rates too.
There's a lot to understand.
There's a lot, especially buying property or any investment. But
yeah, and you could be buying somebody else's problem as well.
Sure.
Yeah.
So, and tenants do strange things in properties as well.
And it's a headache. I mean, I've had so many conversations with people that thought that property investing was the way, and have a portfolio of properties, and they're exhausted by it because it's constant. There's a leak that AC needs fixing, and you get the call from the tenant all the time. And that's actually the joy of renting that so few people appreciate, is that when you rent, you get to call up somebody else and say, hey, this needs fixing, and you don't have to foot that cost, but the landlord does.
Yeah, I always kind of see, at least from my perspective, people that can fix things themselves, people that are naturally a management company for their real estate, or realtors themselves, that they don't have to pay themselves a commission. Those are the only people that seem to do the best in real estate markets. So if you're not one of those three people, I know we're probably getting calls from the realtors on island. So Susan, just cancel those. Just hang up on them.
Property is wonderful. Like it is. We all have to have a home to live in, and I would never discourage anyone from buying their home.
Right.
Yeah, or a rental property as part of a bigger plan.
Exactly.
Like you say, Alan, but you've got to make sure that the other things are in place.
Exactly, and you need the liquidity as well, so you can't just have all your money in bricks and mortar, so...
Yeah, you can't eat it.
No, you can't eat it, yeah.
All right, next question, let's move on. The National Pension Holiday is set to expire on June 30th. What happens now? Any ideas?
What, in terms of what the government are going to do next, or...
Your choice. That's the question posed.
Well, hopefully people will go back to contributing to their pension if they haven't been, and I think many people have continued contributing to their pension. And the pension is what, for many people, they're going to have to rely on in retirement. It's an absolutely crucial part of financial planning.
Yeah, I think now is a good time to take cognizance of, if you did take your withdrawal, if you did stop your contributions, to have a good long hard look at what you've been doing with that money. Did you actually need it, or could you have made other sacrifices, or did you just go and blow the money, which is unfortunately what I think a lot of people maybe did, is that they spent it on lifestyle expenses rather than emergency needs related to why you could get your pension out and why you could stop your contribution. So I think it's important for people to really have a serious look at what they've been doing with their pension money.
And perhaps there's going to have to be a bit of catch up.
Yeah, and now they've gotten used to not having, they have the extra disposable income in their with what
just in their pockets, right?
Exactly, yeah. And what have they been doing with it? Have they got used to it now?
They've been buying boats.
Yeah, exactly.
Yeah, so there's that double whammy. If they've got used to a little bit of extra cash, but they actually really need to put more into their pension in order to catch up on the last year of not making payments and making that big withdrawal.
Yeah, because the contributions as they are nowhere near enough.
Right, exactly.
So if you did stop it, you're falling behind by more months than what you've taken a pause by.
Yeah, we'll see. So. I mean, we're still not open. And the government, I think there was a lot of rhetoric about the pension plans on the campaign trail, but there's not been anything kind of mentioned in terms of the pensions from the new government yet. So we don't know. We don't know if the pension holiday will continue to be extended. Again, we're not open, so it's hard to say that they will just say you have to start contributing to your pension. But if we do, everyone should consider that their paycheck will be 5% less if they've not been contributing to their pension. And like you guys said, I think we do probably need to think about doing some catch up at this point, because there was $600 million that was taken out of people's retirement, and
Gosh, is that the figure?
That's not going to get put back in.
Yeah, it's not going to get put back in quickly at all. So that's why I just think, you know, I don't know when they might start it that you have to do it again. I mean, if they don't change it again. But I mean, if they do push it out, you know, it becomes a thing of, well, when does it start? Yeah.
And for what types of companies, I guess.
Exactly.
So, I mean, the dive operators obviously can't be contributing to pensions when there's no paychecks to be having, the jewelers and things of that nature. But I would think that we in the financial services industry, along with the government employees, should definitely be putting back into the pensions.
I agree.
Absolutely. And it's also important that people know that if you have been putting money into your pension, the last year's worth of contributions are classed as voluntary. And the voluntary contributions are treated differently within the pension plan than the mandatory contributions. So that's just something for people to, you know, maybe do a bit of research to see how the voluntary contributions are treated and what the different options are.
You can take them out for special reasons.
You can take them out for special reasons, and you can also invest them differently, which is quite important, because the pensions, as you age, they're automatically moving you out of stocks and shares, what we call equities, which is the part of the portfolio that's going to generate the long-term return, and moving you into bonds, which is the stabilizing part of the portfolio that is going to generate a much, much lower return, perhaps a negative return when we take inflation out of the equation. But your voluntaries, you could opt to put into a portfolio that has more exposure to the equities, which will give you that long-term return.
Yeah, depending on your time horizon for your...
Absolutely, but if you're in your 20s, 30s, or probably 40s,
absolutely.
then that would make sense.
100%.
Absolutely.
All right. Last question, because we only have a few more minutes, but if you could change one thing about Cayman from an economic standpoint, what would it be?
Pensions?
Purely philosophy. Pensions. All right, how would you change it?
I think that's such a hard question. I do not have those answers, Amy, but something has to change, I think.
I think one of the things that could be changing is the amount of like financial education that's happening at schools, employers, government. I think that's one of the things that could definitely be focused on, you know, which will end up improving the economy as well, and spending a bit more focus on technology, you know, locally getting people up to speed on things. Like
banking technology.
Banking, you took the words out of my mouth. So yeah, I mean, getting people more educated, improving technology, it will really help the economy, I think. Yeah.
Who do you think is best posed to kind of deliver that education?
I think financial advisors are, you know, obviously I'd say that, but I definitely think so, because we can take a more independent approach to it, rather than, you know, relying on some of the financial institutions that are educating you while they're trying to sell you a credit line, you know, which is maybe not the way you want to go. So I think, you know, helping people with budgeting, understanding financial topics and complex, even the most simple things is really important. And I think it needs to start in schools even. Yeah. So
some accountability for budgeting and some of those just basic skills that we sometimes take for granted, I think. I was trying to think of one, and it was not a one, it was kind of a list, but I was thinking about maybe the Cayman government making a deal with Amazon where we could import directly and the duty be included in the price. I think that would make a big difference in terms of what the speed in which we could receive goods and services and kind of modernize us. I know that was something that I really miss in terms of moving to this island, and also kind of the option to amortize stamp duty. I think that's something that a lot of people are not able to kind of save that mass amount of cash to buy their first home right off the bat.
We got to cater to lower budget housing. I mean, housing has become so unaffordable for so many people, and I think that's something the government really has to tackle. You know, house prices are being pushed up by the 1%.
Yeah, and that's 100% true. And especially as we're adding these major hotels that are going to have to bring on so many workers, so many more house cleaners, so many more cooks, so many more, you know, people to open the doors. Where are those people going to live? There is not very much affordable housing, or at least low budget housing for people to be able to live. We're only building over $1 million condos. Sure. So I think that is 100% something that we need to be looking at.
Yeah, and then the transportation factor comes into that as well, you know, having to get to work for a lot of these people, because you're not going to put them on 7 Mile Beach. So,
good public transport system. Wouldn't that be
That'd
joyful?
be wonderful. Yeah.
Your mouth to the government's ears. All right. Well, we're almost out of time. And so as a final note, we wish to remind the listeners that a rebroadcast of today's show can be heard as a podcast on the CFA Society Cayman Islands webpage, as well as on all your favorite mobile podcasting platforms. And encourage anyone who has a question or topic that they wish to cover, please tweet us at Money Sense Radio and join the conversation. With that, thanks again, and please tune in again in 2 weeks' time.